we're just about to do market open. I'm still doing a little bit of chatting, but all the main stuff's done. Like, so for instance, the daily bias today, so it's still bullish overall. However, we've got a bit of a weird one now, where they're not lining up fully. So as you can see, we just took out previous daily low and tagged a daily fair value gap on Nasdaq, which is fine. However, on the 4 hour, we're downtrending now. So we broke structure with a candle closure underneath this, which was yesterday, and before market open, or just after market open, I think. And then we had a continuation of the trend when we closed below this, or even, sorry, this low. So yeah, I don't even know. It was this low or this low, I forgot which one, but yeah, we are downtrending on Nasdaq. However, we go to the S&P, we are not. We are very much bullish. We've got really good buying power. The 1 hour's bearish, but I can easily see that as a 4 hour retracement. We've got all these 4 hour lows. Look at this low resistance liquidity here, because we had the SMTs from, 1 second, let's favorite that for views. But so if we go here, look, SMT here, let me change that to white. There you go. So the SMT here, so that's now a bunch of low resistance liquidity, and same here with this pre-market lows that price might want to come down and take out, and we might get a structure shift. We are at all-time highs, so we have to treat this as market's going to continue to go up when there's a predominant trend. Yeah, always follow the predominant trend of the market. It's the same with Nasdaq. I'm still going to be overall bullish on this, but I might want to see a bit more of bullish confluence. So where the S&P, I might, well, it would be valid for me to look for an SMT and then 1 minute break of structure continuation. On the Nasdaq, I would probably want to see a 5 minute break of structure and continuation. So then, well, I mean, technically speaking right now, so, I mean, did we break structure back down there? Yeah, we did. But this was a break of structure, and you could always, for example, use this. If we look right here, and market's just about to open, but yeah, break of structure here because we tagged the previous daily low, like I said, huge draw on liquidity to target, and then get the reaction. 5 minute break of structure, 5 minute continuation. So even if I wanted to be like, this would be an entry, and then depending on the risk reward, but because Nasdaq ran so much lower yesterday than the S&P, that means we can get a better risk reward out of that. So there you go. That would be what it'd be, a target. The previous daily high would be there for a 1 to 3, or even this one here, 1 to 2, 5, I think. But hey, we're not going to do that. We are currently looking at market open and what we want to do. Now, Nasdaq did leave relative equal highs on Asia session and London session highs. So that's really good because there was no reaction from that. I think, okay, yeah, so we already took out the highs before the market even opened for London, but then on London open we just tagged those highs again, and then yeah, straight down, which was good, I guess. But we don't trade London, so at least on this specific on the indexes, so yeah, nothing to worry about there. It doesn't even look like there was an entry on that model when we tagged the highs. There was no continuation model really to go for, but yeah, you'd have to get a deeper retrace within one of these 1 minute, but that's not even ideal. So anyway, let's focus on what we're looking at. So yeah, daily bias overall bullish, but I would probably want to see more confluence on the Nasdaq for longs, preferably a 5 minute break of structure continuation, and that's about it. I think we've got news at, oh, never mind, I thought there was news at 3, never mind. No, it's just a non-farm employment change, and then tomorrow is another non-farm employment change, but there's, oh, it's 3 p.m. news tomorrow, got it. So that's what we'll be waiting for, 3 p.m. tomorrow. But today, no, it looks like we're all clear. So again, I mean, I'm probably going to play a bit defensively just because we there is no news at the minute, so we'll just have to see what sort of volatility we get. I mean, we're pushing down on S&P right now. Now with SMTs, because we already made a big SMT on the higher time frame. If you look here, look, we took previous daily low, and Nasdaq's now moving bullish, like absolutely bullish. Now the S&P, whilst technically this is now an SMT because we just took out 5 minute or 1 minute lows here, but on Nasdaq we haven't. Nasdaq isn't technically the leading index for me even though it is on the 1 minute time frame. We've got to look at the higher time frame. So when you look at the 4 hour, this is a 4 hour S&T, so the S&P is showing much more bullish confidence for me, because like I said, on the Nasdaq we're actually downtrending on the 4 hour, so quite valid we could see shorts. But like I said, if I was tight, look, Nasdaq, we've got all this bunch of low resistance liquidity here that price might want to come and fill, take out, etc. Same, well, Nasdaq's more equal as like an area of accumulation here during London, but again, I would be looking at longs on the S&P 500 most likely. And if the Nasdaq's moving like this, then that's probably a bit of a future guess for what the S&P is going to do later on. But yeah, I would love for the S&P to take out pre-market lows, because then we get an SMT from both Nasdaq and the S&P on a high time frame and something more of a key level, having pre-market lows rather than just the 1 minute lows that we took out now. So if we can get pre-market lows and then a reaction, I'll probably be looking for entries. But again, we want to wait for macro. We've got 15 minutes, so it's not so much a bother. Now, yeah, I should be using the right mic here. But yeah, it's just gotta wait now, I guess. I mean, if we have a look on the S&P, like I said, 4 hour is bullish, and it says we have 20. Do you know what? I'm gonna look on the futures chart, because the futures chart, closes in 34 minutes, so this will give us a good indication as well. I mean, I always wait for the macro, but if we wait until 3, it depends how we push really. If we take out pre-market lows and start getting reactions back up, then I know we're probably gonna be pushing back up. But we've got this low to keep an eye out for. So if I just tag that, I need to. So this one, and we'll put that in red, because red is where we know that is bad. So yeah, if we break structure to the downside here, I'm probably end up gonna not trade in, just because we're 1 hour downtrending, 4 hour downtrending, and that means daily retracements usually. So we've got this big daily fair value gap, which is what Nasdaq tapped here, because we took out previous daily low, tapped the daily fair value gap. The S&P might want to come and do the same. So it's either a really good daily SMT, because we've got daily fair value gap SMT stacked on top of previous day low SMT. So it would be a really good smart money trap to have. But yeah, I'm just gonna do nothing. So yeah, it would be nice. I mean, we've got 5 minute break structure down now, so everything's bearish now. So even on the 30 minute, 15 minute. So yeah, I'm not entirely worried, but hey ho. I did a little live test on gold today as well. We might as well go over that whilst we're on this. So you can probably see there we took the Asia low out, and then we got this huge 5 minute break of structure here, and it was like to enter on that would be such a bad risk reward, really, especially because this whole strategy is a Judas swing, and this first green target is a Asia high, and then we have the previous day high. So yeah, a 0.88 risk reward is not good at all. So the whole idea with this was, obviously it's liquidity sweep, 5-minute break structure, enter. Now, would I enter this? Probably not, just because of the R. Or you could wait for a deeper retrace, which we did get. I mean, I jumped to the 15-minute when I was just looking at it, and we did tap this. There you go. We did tap this fair value gap, but I'm gonna change the body of these because they're so like. It needs to be much brighter. Anyway, yeah. So we did tap this fair value gap. But yeah, so we tapped that, we got a reaction, and then I would have been happy to enter, like, maybe if we got a 1-minute break of structure. But yeah, it's just more like spitballing ideas. So these are more flexible adjustments. Like I said, 1-minute break of structure, 1-minute continuation model. There's your entry. Now you could put your stop loss at the lows, and then yeah, you could target Asia highs 1 to 4 RR. But again, that's not necessarily my setup. How I would do it, I would probably put at least underneath the fair value gap, but more than likely again under it, which is still just over a 1-to-1 risk reward. And yeah, it's not optimal. So yeah, but still definitely a positive thing that we took out Asia lows and then took out Asia highs afterwards. That's the whole point of the Judas swing. But like on previous days, I think, was it down here or somewhere, I got like a 1 to 4. Yeah, it was this one, wasn't it? It was sweep of the Friday highs, London Friday highs, and then it was 5-minute break of structure here, and then it was at the lows, and then even at halfway to Asia low, it was still a 1 to 4 RR or something. Although it says 1 to 339, so it's slightly off, but yeah, like look, Asia low, 1 to 7 RR. We didn't hit it, but that's what I mean. So like today's risk reward wasn't great. Like I said, it looks like a range day here because yeah, we did sweep lows and then sweep highs, but it's kind of range in here. But on the contrary, S&P is moving nicely, and we're moving well. We were pushing lower on the S&P, but looks like we're coming back up now. So yeah, 1-minute highs. I'm gonna go make a drink real quick because I've got to wait for macro anyway, and then most likely, I mean, as long as we sit above this red line, I was kind of hoping we would have taken out the lows here and just gone quick tap and then kind of back up with a displacement, and I could, well, hopefully by the time macro comes, an entry would have formed, and then we would have been closing above this 4-hour low, so we don't break structure. That would have been a super good entry. But yeah, it's going to be targeting London highs because London highs are now all-time highs, and my dog is barking, so yeah, I'll be right back. Okay, so I'm back now. Now, it looks like we're going to push for these highs on 15-minute breaker structure on Nasdaq, so probably a 30-minute. So, I mean, we're going to get a 5-minute breaker structure on the S&P here. So if we do, I'm probably going to be fine looking for a 1-minute entry like here, like this. 1 minute here. Because we're already in an uptrend, if we just need the 5-minute breaker structure really, which we might get now. So we did get a 5-minute breaker structure, but it was quite weak. So yeah, I mean, do you know what? I'm not going to take a trade. What I'm going to do is I'm going to take a live test, because the whole point is that I'm mechanical with the setup. I only want to execute when my setup arises. Now, yeah, we have a 4-hour SMT on pre-market here, which formed, and then we're getting reactions to the upside, which is good, but it's not ideal. Like I said, we took out 1-minute lows here, so if anything, we just probably want a live test. Like I said, we're in an uptrend here. There's a 1-minute fair value gap here. Now, if we get a continuation of this, my live test is probably going to be something like this. Because even at pre-market highs, look how bad that RR is. But then the next take profit really would be at London highs, which is that 1 to 5 at this accumulation area at the highs of it. And then, yeah, this would probably be my live test for the day. Like I said, there's no SMT, so there's no reason for me to trade. I'm not at a point where I think I'm good enough to say, look, I know. Do you know what I mean? I'm not a trader where I'm like, I'm profitable. I know what I'm doing. Yeah, I've had over 2 years experience in the markets now, which is fair enough. Like, it's experience is experience. So I have a pretty good understanding that, you know, maybe we just want to keep pushing up, especially if Nasdaq has, especially if the S&P is just pushing up, 5-minute breaker structure back up. So this 1-minute fill, if it got a full continuation, then yeah, this trade probably would be valid. But we'll just have to see what price does. Like I said, I'm not going to enter it. It's not something. It goes against my rules quite simply, and it would be immature and bad of me to enter that just because I wanted to enter it. That's just showing impulse in the market. We're just wanting to enter a trade just to enter it, without seeing the highest confluence of all, which is a liquidity sweep. Which, okay, yeah, we got the 4-hour previous daily low hit. So technically, yeah, we've got the sweep. We've got the breaker structure. We've got the S&T. And we're waiting for a continuation now. So, but for me, I feel like it would be forcing it. I'll be going. It's like me forcing a bias and forcing the trade and going, yeah, well, market's done this and that, when it's not done it in its ideal conditions that I would want it to be in. So that's it. Just gotta wait. Really, like I said, I'll happily live test this, because not only that, this still keeps me in the market in terms of my knowledge. It helps test my knowledge without committing, without risking when I don't need to, when it's not ideal for me. So, and that allows me to collect data where I can then in the future go, well, there's so many times where I've done this now where market hasn't come and swept post market open and it's just gone up, but I've got the reactions and I've had the confluence to enter, but I just haven't. And if I get enough of that data and I can look back and go, okay, this is working, then yeah, I can probably start doing that. But I want at least a month of that. So considering we're only on day 2, yeah, we'll be looking at least August. So, but there's no rush for this. That's the whole point with me recording these videos, is that I don't rush. Like I said a few weeks ago, I would have just been sat on my phone doing. I mean, I can chart on my phone; it's not an issue, but it's more like then just looking at my phone, going, "Yeah, I'll enter that. That'll do," kind of thing. It's not good. It's not healthy. And look, we're accumulating here we're respecting this fair value gap, but there's an accumulation of price and it's getting choppy now, which is not ideal. Price obviously wants to decide if it wants to come, and if I'll still look for a trade. We've got over an hour. We got an hour and 5 minutes until my time limit is up. So if market wants to come down, sweep some of these lows here, some pre-market lows, I'm 100% down with that. And I'll still be looking for longs on the S&P 500 because Nasdaq's the one that took out previous daily lows. So yeah, even though I think it could go both ways. I mean, look, we're really showing bullish sentiment, but I feel like Nasdaq's made its move, unless it was to retrace all the way down here, like past equilibrium, maybe into an order block, like this 30-minute order block or something. I don't see it as worth it. But even then, if price really dumps that hard, that to me would just say shorts all the way. I think it would be pretty dumb to do that. So anyway, we'll focus on the S&P today. That's where I'm looking at, because like I said, we've got a liquidity sweep and we've got an SMT based on previous daily low and a daily fair value gap. That for me is high confluence, where the S&P has showed bullish sentiment. We haven't hit that. We haven't hit previous daily low. We're quite far away from it. So if we can take out pre-market lows, or even these lows here from market open, I would be happy to get into it. But then again, if we're going to take out these lows, I would really like to see these lows taken out, because that just creates low resistance liquidity. As soon as Nasdaq makes a move down, the S&P is just going to shoot through all of this. So yeah, we just got to be patient, really. And on top of this, if there's no trade today, that's fine. We can trade tomorrow. I'm still working on other things. I've got my TikTok I'm working on, which is doing pretty okay, to be fair, considering. I mean, I started this account. It's kind of weird. Like, I literally just post like aesthetic stuff on TikTok because I'm just trying to find other ways to monetize things and just like eventually, like build something. And this TikTok's been doing really well. Like, just all my posts are getting like average at least 2,000 views, and that's average. So like, obviously some don't get many, they'll get under 1,000, but a lot of these posts are getting like 5,000 plus views. And I've only got 78 followers now. For reference, a week ago, I only started this a week ago and I had like 19 followers, so I've gained quite a lot. I've been posting consistently. It's really cool. I'm enjoying it, and I enjoy what I post as well. I'm actually, it's actually nice things. It's all like aesthetic. Like, you get like some pages, they'll just post videos or photos of like nice places, like beaches in the Caribbean, or in like, say, Greece and Santorini, and like really nice views and stuff like that. That's kind of the content, the vibe I'm going for. But it's going pretty well. So I'm kind of happy about that. And that's it. But I mean, I could have been posting like this for a week and I still would have been posting, and I could have only got like 1,000 likes across all of my posts, but I've got over 10,000 likes now in like, it's pretty amazing, really. So I'm just gonna keep continuing with that on the side with trading, because they're both different. I mean, trading UK time, I'll be done at 4 p.m. and then I upload my TikToks during the evening, generally like 5:30, 6 o'clock, and then another about 8, 9 o'clock. And then if those posts are going really slow and nothing, and they're kind of dead already, I'll post one before I go to bed about 10 o'clock. But yeah, and then I might post one at lunchtime. Did I post one at lunchtime today? Yes, I did. I posted one about 2 hours ago. But I'm having real fun with that, so I'm trying to keep doing that, and just like, all it takes is like one post to go viral. I've also started doing the Snapchat spotlight, though I don't think I've got any views on that. It's kind of, yeah, it's apparently it's something where it's just like your posts will either get 0 views or they'll get a lot of views. So yeah, but you can get paid from that, like for anything. TikToks is a bit different, where if you want to get paid from the videos, they have to be at least a minute long, which is kind of goes against mine. Are only like 5 to 10 second videos, because the loop and the like kind of, do you know what I mean? So I'm gonna have to figure out a way to do that when I come round to it. But S&P 500 here, 1 minute breaker structure down. Any kind of retrace on the nope. Nothing really to look for. Not even a 30-minute gap. We haven't even. Yeah, there's not much going on right now, if I'm being honest. Nasdaq's not really pushing down. Yeah, it's kind of a dead day. I'm not gonna lie. I mean, Nasdaq's made some. I mean, this was kind of the same like as yesterday. Nasdaq was dead choppy yesterday. Post was it Nasdaq that was choppy? Yeah, like, I mean, yeah, Nasdaq, and then it just made the move down like it. But then the S&P 500 was the chop. I don't know, bro. I don't remember now. Let's have a look. Yeah, look at this. Like it came up and then it came down and then it's coming back up and then it was just chopping upwards. Yeah, the S&P didn't perform, but Nasdaq was the one that made a clear straight move yesterday. Like this, like just straight down. It knew where it wanted to go. So it's kind of looking the same today. Nasdaq knows where it wants to go and the S&P doesn't. But they do say that the Nasdaq is generally the leading index. This one S&P tends to be more choppy, but we always want to trade the one that we see as the leading index in terms of, you know, like what's actually performing and giving us the best confluences. So considering that the S&P is giving the best bullish confluence overall from the bias for today, and just the price action that we're seeing. Like, yeah, Nasdaq's showing bullish sentiment totally, but then we're still in a 4-hour, what I would call a start of a 4-hour downtrend, and then, but we are still bullish on the daily. So again, I'd still be bullish overall, but I would be way more cautious on this, because we could just be sweeping highs. Look, maybe fill in this fair value gap, this 1 hour maybe, a tap into that, and then come back down. Whereas at least the S&P is bullish and everything. I mean, what time? So we didn't break structure on the 4-hour, which is great. So now I think we can look for some form of live test, because we didn't take out lows. We came down and we took out some. We took out something. Yeah, not much really. We came down. I don't even know what the point of this was. I don't know what we're filling here. There's nothing going on. So yeah, I think a live test is coming out. This is kind of the trade I'd be looking for though. So I'd probably just put them at these lows. But yeah, we've got a 1 minute breaker structure. We've got a fair value gap fill, and as long as we get a continuation of trend here, then I would enter. So that would be an entry. So that would be the entry for me today. So we'll see how it goes. I really doubt price is going to come down now and sweep these. Like, it could do, but I highly doubt it now. Like, it looks like market's showing its move. We've had selling pressure and it just doesn't want to budge right now. So and same with Nasdaq. Look, we're just climbing towards these Asia and London highs. So I would just stick with this really. There's not much more to say. I mean, I wouldn't use pre-market highs as a first take profit just because of the risk reward. Look, that looks like a, I don't know, 1 to 0.6 or 7 or something. But you could easily use it as a an area where you might want to move stocks to break even or vice versa. But my first real target would probably be here at this accumulation area of London, and just basically as soon as we hit those highs, which looks like a 1-to-1 or close to it, maybe just a little bit more. Yeah, 1-to-35 RR, or 1-to-1.35 RR, I should say. That is where I would put my stop loss to break even, and then I would just trail my stop loss along there, and then take out London highs. I'd probably take off 80% of the position, just let the rest run, and yeah, that's how I would do this today. So yeah, this looks like, but I think this just shows it's about sticking to rules more than anything. It's about not allowing yourself to let price make decisions for you. When it's going your way, but it's not doing what you want. That's when you start letting your feelings make the decisions for you rather than structure. Structure over feelings always. And that's what we're trying to improve on. This is what's going to help us pass a trade, because even if, like, I would rather lose a trade on the right entry, on doing the right thing, rather than winning a trade doing the wrong thing. Because if I entered this and I won it, I'd be like, oh yeah, I think I'm the best guy ever, but then I would forget that I did the wrong entry, I did the wrong thing. And it's not productive, because then in future, all I'll remember is I'll go, oh, I won on that trade, I can do this again. And then before you know it, you're going against your rules, you're going against everything, and it's not healthy for trading long term. So yeah, you might get a short term win. I might a 1-to-3 RR, might win 3%, or if you risk. I mean, my first trade on the account, because I've got a 70k challenge, a brand new one, it's a 2% risk I'm happy to put down for the first trade. So like this would have made 6% if it hits full TP, which is cool, but I don't want to hit 6%, because then that can easily spiral down into taking trades that don't matter, over trading, over leveraging, getting stopped out and going, oh, I can do this again. So again, this is just data collecting. I think this will be good for us to also watch price do what we want it to do without getting an entry, because look, price is technically leaving us. We didn't get an entry. Well, I could have entered, but we didn't get an entry, and most of the time I think people will be mad. And yeah, look, it sucks that price is doing what I want, and you could have made a bunch of money, but I'm not at the point where I should be like cocky and say, oh, I can do this, I'm the best trader ever. There's no there's no pride in that. There's no discipline, and that'll only catch up with me later on. I'm thinking long game. I've got to think, if I stick to this for 6 months, I'll probably have passed over challenges, have multi 5-6 figures in funding. That's my aim. Multi 6 figures in funding, and getting like a decent amount in first payouts. That is my goal. I've been trading for 2 years now. The issue I've had is the discipline bit. I've proven that trading works. I can do it. I can make money. I've passed challenges. I've got a payout, a singular one before, which I just used to reinvest into another challenge. But I think it's more about if I stick to this for 6 months and be really strict with myself, I'll then be in a position I've never seen myself in before. And to get something you've never had, you have to do something you never did. So I think that's where the difference lies. I've always been doing the same things over and over, making the same mistakes, not doing things, I have been journaling, but I hate writing stuff down. I'm really bad. This is why I'm recording these now, because it's so much easier for me. And because I'm going over the chart, I'll be able to see the full process of what I was doing, what my thoughts are, my emotions, and I can log it all in this video. And it's actually so much easier that way. And I'll be able to see my growth in my discipline. So yeah, we'll just have to see. But I'm looking forward to really zoning in and doing the right thing, you know. But price is still doing its thing. We're almost at pre-market highs, not quite there. Moved down a bit. I don't think no. Nasdaq's just slowing, but chopping, just going up though. So yeah, let's see how the gold. Oh no, did I? Oh, it's come back down now. So what did we sweep over? Pre-market lows. We just swept pre-market lows. London lows are here. Pre-market lows and a long from here. 5-minute breaker structure. Could easily live test that, but again, we won't be trading gold in that session regardless. So have we got any? I was gonna say this is the other thing as well. If we get a 15-minute breaker structure, that's just more confluence. I mean, again, I could easily take another live test. 15-minute breaker structure, okay. 5-minute fair value gap or whatever. Look, there's one here now that's just formed. Is there even any wicks in this? Like, there's no wicks in that. No. No wicks in that either. I've never seen that before. There's always a wick somewhere, even if it's tiny. But yeah, a clean fair value gap here could be another entry. 5-minute fair value gap and a 1-minute breaker structure. That could be a good entry. Like I said, we're pushing up now. So, and well, I also saw this though. We had a. I don't even know if that hit. I don't think it did. You know, no. I thought it hit that 1-minute fair value gap. It didn't. Because that would have been an entry, continuation entry, and you would have just, I don't know, put your stop at these lows or something. But hey, price can do what it wants right now. Oh, so we can still log this as a win if we hit. I'll definitely log the. I might even start recording for a little bit and just and let this play out because I'm not going to trade now. The market's made its move. So well, it's not made its move. We're only 45 minutes into market open, so price really could bomb and take out these lows and reverse again. But it'd have to be like the best liquidity sweep I've ever seen. So, and I don't think that's going to happen realistically. So, but you know, tomorrow's another day. There's no stress, there's no sweat, and then I won't be able to trade Friday, but we can see what we're doing. And then next week I should be able to trade Tuesday, Wednesday, Thursday, and Friday morning will be the gold trade. So yeah, I'm looking forward to that. I'm looking forward to the gold setups because they're so simple, but they're so clean and they generally give a decent RR every time. The only thing I could argue when I said, because obviously generally we're looking for a 1 to 2 to 1 to 2.5 RR, when I got this 5-minute breaker structure here and I was just aiming for the highs, because when I mentioned yesterday how we got a 1 to 4 RR, when I mentioned we had a 1 to 4 RR on the on that other trade, if we entered this, it does like balance out in the end. So if you just took every single trade, I do believe it would balance out because look, like less than a 1 to 1 RR, right? So you make 0.9% if you risk 1%. So I do, if we had took the trade say yesterday as well, like if we were trading this as a normal model, then we'd have made like 4%, and then we would have made 0.8%. So it balances out in the end. But again, sometimes you don't want to maybe take every trade. just because, like I said, you might have go, I'd rather not take it. But then you're still up 4% or whatever if you want the higher setups, and then just, I mean, the setup yesterday didn't even hit Asia lows, and if it did, that would have been like an 8% trade. I mean, that's most people for the month, and then you'd be done. You could literally take that one trade in the month and be done. But obviously the price didn't hit that anyway, so it doesn't really matter. But S&P live test is going okay. We're climbing towards these highs, which is great for the. But yeah, I think the indices right now is kind of just free money, just because we're in an uptrend here. Look, the likeliness that price keeps going up and up in a trend like this is always more, because people always they'll always try and short the market, try and hit the reverse. Like, everyone's always waiting for a reversal. This is the difference between just normal retail traders and successful ones. Obviously, I'm not talking about myself, but just through books I've read, through other traders I've watched, they'll always trade the trend. They don't go, oh, look, we took out all time, like, because we took out all times highs here, right? Yeah, and we did get some form of reversal. But people will be doing a reversal, and they'll be like aiming like this far down, right? They'll be aiming like down here. They'll be trying to hit a 1 to 20 in one day, and people always try and catch reversals. Now, can reversals happen? Yes, absolutely. Did it happen most of the time? No, because a market's trending. More than likely, that means there's confidence in the market. If there's confidence in the market, why are people going to sell? People are going to buy. You know, people aren't going to panic and go, oh, we're at all-time highs, let me sell. No, they're going to go, it's going to keep pushing, keep waiting. Do you know what I mean? Before they cash out anything. So, or at least I'm not talking about retail traders there. I'm talking about people who actually think about the market. They will be targeting higher because they'll go, well, there is confidence in the bullish structure of the market. There's price wants to go up, so why would I sell now? But yeah, everyone tries and catches shorts, and I just think, like, if you just trade the trend, you will increase your win rate so much. At least I did, and that's just coming from watching other people. Like, I used to try and trade reversals. I mean, you can be a reactionary trader. Like, you can easily have said Nasdaq here, take out these highs and look for a reversal. Yeah, it totally can be valid, but the chances and the trading is about putting probability in your favor, because the markets are against you. So it'd be pretty dumb to really go against that. And yeah, I just think, trade the trend. But I'm probably going to shut this off for a bit. I mean, look, we've hit pre-market highs, so yeah, I might just stop recording for a bit, see what's up in about half an hour to an hour. I'm not going to trade now. There's literally no point. Do I wish I entered this? Well, I think, shoulda, coulda, woulda. It doesn't really matter. I stuck to my rules, and that's what's most important. Sure, it's free money. Yeah, I could have easily made like 4% on this. Well, I say 4%. We're not even at any of the TPs yet, but even first TP, sure, it's whatever, isn't it? And I can't guarantee it, but yeah, it's a good read. I'm happy with it, and we'll trade when the market actually gives us a good setup and valid setup. So yeah, I'll come back to this when it's actually something's happened. Either we've hit this first take profit here, or we get stopped out on the live test. And obviously, I mean, if we get stopped out, it's 100% correct that this is why we don't trade against our setup. I mean, this is probably at someone else's setup. This trade right now, someone else probably takes this, and that is their entry model, which is great, but it's not mine, and I'm not used to it. I don't have enough data to say this is valid and consistent. So yeah, we'll go over either one. If we hit take profit, that's stop loss to break even, and then probably a trailed stop loss to London highs if we want to get there. If not, then that's absolutely okay. But this is definitely a win today for psychology more than anything. A day out of the markets is always better than a day in the market, and less is more. So the less I trade, the more likely I'm going to do better when I am in trades. And that's what I'm trying to increase. I'm trying to increase the quality of my trades. This is not a quality trade at all. This is okay, I have a pretty good idea, let me find an entry. This isn't, oh my god, every single one of my confluences has been hit, this is A plus setup, I'm entering. This is just, an entry. So we don't trade it. But anyway, I'll come back to this in a bit, and we'll see what happens. Okay, so we're back. Trade's doing really well. Yeah, it sucks that we didn't enter this, because we'd be up because I said it was 2% risk on my first trade. I've not took a trade yet on this challenge. 4% would have been up over already, which is pretty cool. Now I might have taken half the percent. I probably wouldn't have. I probably would have just set my stop to break even by now, because that is kind of my trailing. And now that we've made this move up, my stop would probably be at this 5-minute low, which would be a guaranteed profit of 1.6% around that. So yeah, like I said, mainly what I want to be doing is waiting until our full take profit gets hit and take off majority of our trade there. And then if market moved against us, like a 5-minute break of structure or something, or I was just like, it's like consolidating at London highs, I could just say, okay, let's exit the full trade for the day. But this is really good. So yeah, it really sucks, and it's whatever, because I could have took this trade. Like, I could have. I was ready to enter and I didn't, but it didn't follow my rules. Like I said, it's better to follow my rules and lose than it is to go against them and get one win, because like this might only happen once every 20 trades when market reacts like this based off this price action. So I need to kind of count my wins there. I followed my rules, and not only that, this is now what's really good about this is not only was my bias correct, because we've hit this first take profit, so it's already a win for me. It's more so the fact that this helps us collect data. Now I can put this in a data collection playlist for me, for live tests, or I'll literally just put live tests and then I'll be able to look over them. I'll put the risk reward in the title of the video, so I know how much what it was, what won or something. But yeah, that's about it really. I'm gonna log the video off. There's no point recording for. I mean, my trading window's up in 5 minutes anyway, so it doesn't really matter. But yeah, that's about it really. We got a 5-minute fair value gap. That price 15-minute fair value gap as well. Price reacted off that. I mean, a good setup off this would be this inverse fair value gap. So we're trading into it now. So all you need is a positive reaction out of it, or a 1-minute break of structure back up and out of it, and that would be a good trade to take based off like here, there, and then just target those London highs, 1 to 1.2 RR. But again, I'm not looking for that. It's I think that's very stupid. So yeah, it's my trading window's almost up, but total win for today. Followed my rules, followed my psychology, did a live test and got it right. So yeah, I'm gonna put this in. Like, this is a road to a funded series basically, so I'm taking it very seriously. Yeah, £1 million funding. This is the road to. I'm with FTMO at the minute, so I can get like 280,000 with them, and then scale it from there. But that'd take a couple years easily to scale to the max. However, I'd be looking at other prop firms as well on top of that. Ones where I can build up just multiple accounts, and then I don't even know, bro. I'll cross the bridge when I come to it, but things like copy traders I think will be very helpful, because it's going to be hard to enter like 10 to 15 different accounts. So yeah, I'd just have like one master account, trade off them all, and then I maybe even go on to futures. It depends. I don't like the futures rules. Sometimes, like with the consistency rules, and you're not allowed to make over 40% of your profits with one trade, because it's like, what if one trade just does really well out of quite a few of them? You know, yeah, sure, you're usually hitting 1 to 2 RRs, but then one of them just hits a 1 to 6, 1 to 7, maybe more, 1 to 10, and you take full, and you make like 10% in a payout cycle. Like, they're gonna say you broke the rules, or I'm just not a fan of that. I always like balance-based drawdown as well, rather than this trailing stop loss all the futures do. I mean, futures might be the future of prop firms, and if that's the case, but FTMO have been in the game for so long, like, you can guarantee yourself £250,000 in funding, pretty stress-free. And then, like I said, I'd move over to some others, like, I think there's some other prop firms, Funded Next, FXify, there's quite a few. I'd have to do research, but for now it's just passing these and getting these done. So yeah, that's about it really. I'm gonna log off. Like I said, this is a win, so there's not much more to say on it. But yeah, I'll be trading tomorrow. We'll be waiting for that 3 p.m. news, and hopefully we can get some setups, because I'm liking the way this is going. We've had a good live test here. We had a positive gold live test, and we'll just have to see how price goes. Okay. See you guys tomorrow.